You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, Quasar Markets Live, and good afternoon to my good friend, Dr. Ellman from the Blue Collar Investor. How are you doing today?
Morning, Howard. Very impressive intro. I like it.
Awesome. Yeah, we've been putting those together for us. How is everything going? You know, this crazy upside down market we're in. How are things going down in Florida with you, sir?
Okay, yeah, well, just got back from speaking at the Money Masters convention in Dallas. And of course, everybody's very nervous about the market conditions. And I've been for the last 2+ months taking all defensive postures with my option trades, all of them. So I've been going with the calls going deep in the money and with puts going deep out of the money. And that's really helped quite a bit in the softening the blow of this market that's down more than 15% in the last 2+ months and 10% alone on Thursday and Friday. So that's helped mitigate. And I even have some winning trades sprinkled in there.
Wow, that's impressive considering how the market has been for sure. But not surprising to me, especially knowing how you do your stuff and the way that it works. One of the things I wanted to talk to you about is, homework, right? That's what we're going to sort of talk about today a little bit. And I've had some questions come up throughout Quasar Markets Live where people ask us about why do I talk about, and I've heard you especially talk about it, how you do a lot of your work on Mondays, how you get a lot of your information over the weekend and you sort of formulate some of your theses, but why you sort of wait until Mondays to sort of make your weekly positions and things. So we're going to talk a little bit about that, and I'm going to bring it up here in the panel. A little bit about extended hours trading, bid-ask spreads, and why they are deceiving. So why don't you give me a little bit of a background on this?
Yeah, Howard, you're 100% correct that a lot of your homework when you're planning your portfolios for the upcoming contract cycle, whether you're doing weeklies or monthlies, and I do both for both calls and puts, most of that work can actually be done over the weekend. That's why the reports that we provide to our members are well before market opens on Monday. So you could do your stock selection, you could do your diversification, you could do your cash allocation. All that can be done on the weekends or on certain evenings. Now, what can't be done is getting the exact amount that option will generate when you sell it, because the bid-ask spreads that are published over the weekend or during extended hours trading is very much different than what you're going to see during live trading, 9:30 to 4 p.m. Eastern time. So that part, like you said, has to be done on Monday or any day you like to do your trades. I like to do mine on Mondays because I'm doing weeklies or monthlies, and because of theta, time value erosion, I don't want to wait too long to enter my trade. So I usually do it for weeklies, definitely on Monday. For monthlies, usually it's Monday or Tuesday.
I think we maybe have to take a step back and explain to some of our viewers, because we do have some new retail investors that are watching this. The stock market in general trades at much longer hours than it used to. In fact, Arca and some of them are 24/7 now, or at least 24/5. But the option market still trades as it did, at least as long as I've been in the market, right? And it's very different than those market hours.
Yeah, you could trade options up until 4:15 Eastern time, and stocks up to 4 p.m. Eastern time. So, but the actual option chain showing the spreads will be very much different during those hours than during the extended hours. And so for those new retail investors doing options, and it's Sunday, you're sitting down, you're going through the stocks, you're going through the option chains, and you go, wait a minute, the spreads are humongous. I can't make any money with these trades. And then they'll send me an email. What's going on? It's nothing like you showed in that last video. And I'll say, well, take a deep breath. and wait till the market opens. And by the way, I usually will not. It's very rare that I'll actually enter my trades at 9:30.
Right.
What I'll usually do is trade between the hours of 11 a.m. Eastern time and 3 p.m. Eastern time. And the reason for that is you're avoiding the early morning and late afternoon computerized institutional
Yeah,
trading,
algos.
which creates a lot of volatility. So let the market open, let it settle down, and then at about 11 a.m. or today's case, once we complete our discussion, I have everything prepared, what I'm going to do, my trades that I'm going to enter, and I go to work. So, 11 a.m. to 3 p.m. Eastern time are the hours when I'll enter my trades. And that's when I'll get fair assessments of those bid ask spreads as to the price I'll get when I sell the options.
Absolutely.
So, typically when you see open interest, which is what I use for volume, I don't use volume because that's reset every day down to zero. I use open interest, so the number of open contracts. That will give you an idea of the actual liquidity of that particular option. Now, sometimes you'll see huge liquidity, and this goes to the article that you asked me to talk about today. You'll see that in a slide or two. Which has huge liquidity. But during extended hours, the bid-ask spreads are much larger than one would expect given that type of open interest.
Right.
So that's what people have to understand. That should not frighten them away from using that particular security if they feel that it is an elite performer, both from a fundamental and technical perspective. No, wait for the market to open up, give the market makers a chance to look at order flow and then set their bid-ask spreads. That won't happen at 9:30. 9:30, you'll probably still see wide spreads. And then as they get an idea of what the order flow is like for that particular day, then they'll have the confidence to then set up the appropriate bid-ask spreads. Like I said, I wait till about 11 o'clock. It's up to the individual investor.
Absolutely. And quite honestly, they have a reason for doing that, right? For not adjusting it right away, is they make money on those fringes. That's where they make their money, is that spread.
Right. And they want to keep the spreads as wide as possible. But if there's a lot of liquidity in that option, then in a fair marketplace, you'll find that spread getting smaller and smaller as the interest in that option gets greater and greater. So the discrepancies that you'll see in extended hours will be made up for during actual trading hours. And that's really, like you said, beginning of this discussion, is really what you have to wait for before you actually finalize your trading decisions. Now, you asked me about an article I wrote a couple of years ago on Viper Energy, and that's what we'll be alluding to in this discussion today.
Awesome.
So let's first, and we probably already alluded to some of this, Howard. Normal market hours for stocks are 9:30 a.m. to 4 p.m. Eastern time, and a few minutes later for the options themselves. But during extended hours, they have this ECN, electronic communication network, which gives buyers and sellers opportunities to match up their trades. The highest bid is matched with the lowest ask, and you can actually make the trade. But the liquidity, the volume during these hours is much, much lower than actual normal trading hours. And therefore, one can expect the spreads to be much greater. And that's what you're going to be seeing in the option chains you pull up during these off hours. So after hours trading, 4 p.m. to 8 p.m. for most brokerages. It might go a little bit earlier, a little bit later with some. And then pre-market 8 a.m. to 9:20 a.m. approximately for most brokers. And that's where you'll get those low liquidity, wider bid-ask.
It will be interesting to watch this over the next few years to see if it does change and follows more of the general market, where we're seeing more liquidity after hours, or where after hours are getting increased and et cetera.
Well, we haven't seen it yet, but that's
yeah. I just look at it as the way everything else in the market's moving. I wonder if that will be a way that moves too.
Right. Whoever expected the trading commissions of stocks to be zero?
Right.
And
That's what I mean is listen, everything that we think is crazy today, that it might not be tomorrow the same way exactly. If you
right,
told me that I could trade for 0%, or I could get options, for 10 cents a contract on some of these discount brokers, I would have said, what can I do? I mean,
yeah.
you've been doing this long enough where you couldn't do it without a broker, right?
I remember in the 90s, I was paying like buying stocks from $50 to $200 commissions
Yeah,
on
that's what I
somebody.
mean.
And you tell that to somebody today who just started trading in the last couple of years, and they'll look at me like, "What, were you crazy or something? How much did you pay?" But yeah, and it just
That's
kept
all. That was the only way to do it. It wasn't like we did it because we wanted
right,
to.
right. And I saw the writing on the wall years before. I said it's going to be going down, and it's eventually going to go down to zero with stocks, and it actually did. But
Yeah.
yeah, you're right. Who knows what the after hours trading is going to look like? 5, 10 years down the road. We just don't know. But
Yeah.
we do know what's going on today, and that's
Today,
how
and that's what
we
we're
have
going to
to base
focus
the
on
trades
here.
on what's happening right now. So
Yep.
in this screenshot now with Viper, which is a 1 month trade from May 18th to June 15th. Look at the spread, the two arrows on the left. Look at the spread there from $1 to 225. So the spread is $1.25, which is huge, especially when you take a look at the arrow all the way over to the right, which shows open interest of over 6,400 contracts. That
Right.
is huge. And with a
Yeah.
huge open interest, one would anticipate a very, very narrow bid-ask spread. But because we're in extended hours trading, it's simply not the case. So if somebody goes on to an option chain, they did their screening, fundamental technical analysis. Hey, Viper is doing great. It's the chart looks like a rocket ship heading to the moon. It's got momentum on its side. It's got trend on its side. Earnings and sales growth through the roof. I mean, the analyst ratings are top notch. I got to have this stock. Oh, but wait a minute. It's only generating $1 on the
Right.
bid. And that's just not high enough for me. And I can't make any money, whatever. And so you might say the heck with it. But no, wait for the bid ask spreads when the market opens up. Well, here we are. By the magic of Howard's fingertip, we have now moved to the option chain during actual regular market hours. And you could see for the same 6,400 plus contracts, the spread is now 35 cents, 275 to 310. That $1 magically became $2.75 a share. Now
Right.
we're talking. Now we got something we could sink our teeth into. And that's because we knew that we had to wait for the market to open, give the market makers an opportunity to check the order flow so they could set bid ask spreads that they're comfortable with, and then we can go in for the kill and sell our option. Now, I wouldn't set a bid price of 275, Howard. I would not.
Okay.
I probably talked about this before. I believe this is our 24th discussion on Quasar Live. So somewhere along the line, I probably talked about it, but I think it's something that your viewers would be interested in hearing again, and that's how to negotiate with these
Absolutely.
market makers. And when we have a bid-ask spread of like this of 35 cents, I'm just kind of rubbing my hands together and I'm ready to negotiate. And
Awesome. I love it. You
and
you and my mother would have got along famously. She loved to negotiate. She was the queen of Tijuana when we used to go on vacation to California. How much for four? That was the first question that came out of her mouth. How much for four?
you know what? Our mothers would have had a lot in common.
I love it.
Anyway, how to do that. Here's how to negotiate with these guys. We take the bid ask spread, in this case, 35 cents. We find the mark or the midpoint of that spread. In this case, it's $2.93. Now, I always put a limit order slightly in favor of the market maker. That I found over the years increases the chance of them executing it at the option at the limit order that I put in. So I'll put in a limit order of 290, not 295, not 293, 290. So it favors the market maker a little bit.
Right.
And it's a day only order. It's not good until canceled. It's just day only. Now, the market maker is faced with the following dilemma. Do I give Allen, do I execute Allen's contracts at 290, or do I publish the bid from 275 to 310 to now 275 to 290? Because the show or fill rule obligates the market maker to do one of those two things as long as we put in a limit order that improves the market. And improves the market simply means somewhere between the bid and the ask spread. So they're saying, you know what? Allen's doing 5 contracts. Let me just get rid of him. I'll give him his 290, and this way I can keep the spread at 35 cents, because the larger the spread, the better it is for these market makers. So one final thing with the show or fill rule, Howard, is that if your broker platform shows a box that says all or none or AON, do not check that box, because if
Right.
you do, the market maker is no longer beholden to the show or fill rule and can just say, no, thank you, and not have to publish the new bid ask spread.
Absolutely. And that is so important because that's what we're trying to do. We're trying to get them to change that spread.
Yeah, and if we could make a few more dollars, Howard, but by spending a minute
Yeah.
by putting in that limit order, and if it's denied, okay, we got a smaller spread. We can either try it again, putting in a limit order in between the bid and the ask, or eventually just settle for the bid price. We really haven't lost anything, you
No,
know.
just a little bit of time. And like you said, when you're doing the amount of contracts that you're doing on a weekly basis, saving a few shekels here and there is going to add up tremendously. And that's for any trader. Again, we want to maximize our trades, and we're always looking to improve ourselves. And this is, in my mind, low-hanging fruit way to fix it, right? This is the first step. If you try and if you can negotiate, we talked about it before we came on, right? It seems like the only thing that people don't want to buy at a discount is stocks. And it's so important to want to. And I'm not talking about being the market bullish or bearish, which is what we were talking about earlier. For those that don't know, and this is going to be played at times when the market is bullish and when the market is bearish. We were right on the heels here of the tariff talk under President Trump, and the markets have been down over double digits for the last 2 days, and still weak here today. So, but it's important in a bull market. It's important in a bear market that we are taking those pennies to the bank, right?
You know what? I look at it this way: just a couple of these trades, if we get that extra money, look at it like, okay, these market makers just paid for my Saturday night dinner out.
Absolutely. That's what I mean is, it's so many. I've seen so many traders who don't use limit orders, who go up market, and my head just starts to explode. And then if you explain to them on how some exchanges that there's actually a higher charge for going at market than there is for doing a limit. And not only did you overpay on one side, but you overpaid on two sides.
Yeah, well, that's one of the great things about Quasar, is because you're providing the education to your viewers that will, I mean, this may seem like, well, what did you save? $15 a contract. But if you start doing multiple contracts, 10 contracts would have been $150, let's say. And then you're doing multiple positions. By the end of 1 month, you could have thousands of extra dollars in your account, depending on how much trading you're doing. Certainly, the amount of trading I'm doing, it's thousands of dollars. When I first started out, it wasn't nearly that much, but today it is. And so, as investors start enhancing the wealth of their portfolios by investing smartly, appropriately, based on their personal risk tolerance, they'll see their portfolios growing. And then little things like negotiating prices with the market makers will, over years and decades and a lifetime investing, hundreds of thousands of dollars is possible. So you shouldn't just poo-poo it. You should take advantage of it.
Yeah, without a doubt. Again, you would do it. You would do it any place else. If you could get your gas cheaper, you would. If you can get your groceries cheaper, we do. But it's just one of those ones where, for some reason, people get very scared when it comes to the stock market of taking advantages of the few tools that we have against. I don't want to use the word against a market maker, but to at least negotiate with the market maker.
I go to the post office almost every day, And sometimes there's somebody in line at the post office and they're sending a package, and the clerk will go, well, you could send it first class for $3.50, or you could send it priority mail for $3.60. And they're sitting there thinking, tearing the hair out of their head, whether they should spend the extra dime sending the package. And yet these same people maybe don't even know that they could take advantage of the show or fill rule when they're buying and selling stocks and stock options and saving way more than that 10 cents. So
Absolutely.
yeah, it's money that's there for our taking. Let's take that money.
Without a doubt. So let's bring it back to the end discussion here.
Okay. So when you're looking at an option chain during extended hours, you're not going to get a reliable take on what the actual option premium that you're going to generate. You can't get it during extended hours. So all the homework you can do pre-market, over the weekend, at night, whatever, select your stocks, decide on the amount of positions you're going to take. First of all, the number of positions you're going to take, then the
Absolutely.
number of shares. So diversification, you want to be in different stocks and different industries. Then do your cash allocation. You want to allocate a similar amount of cash per position. All that you could do over the weekend or at night for sure. And then once the market opens, give the market maker a little chance to see the order flow, to set their spreads. I like to wait till 11 a.m. Certainly you should wait till at least 10:30 at the earliest. And then you'll be able to get reliable option chains that will give you reliable data as to the option premiums you can generate when you sell your options, and then go into the kill. Use the show or fill rule to negotiate any spread greater than 10 cents, 10 cents, more than 10 cents. You use the show or fill rule, and using these guidelines will make a huge difference in the amount of success that you're going to have over the lifetime of investing with selling stock options.
Absolutely. It is so important to do these. And again, the reason that this is, that we're talking about not trading, and I've been talking about it a lot in Quasar markets. I've been staying out of the market completely at 9:30 because these algos are just fighting it out. There's just algos fighting the retail out. And depending on what happens there's just irrational moves to one side or the other. And I don't want to get washed out in that. I don't want to be on the wrong side of that. So I do advise that is a great, take that time, take that hour, take that 2 hours to take one last look at what you wanted to do for the week. Does it still fit the parameters that you wanted to? And if so, then proceed, once you get to that about 11 o'clock time. So Dr. Ellman.
Yeah. One final thing, Howard. I just want to make sure your viewers understand that 90% of the work in setting up your portfolios can in fact be done over the weekend or during extended hours. It's just looking at the option chains that you have to do during actual trading hours.
And the execution of the actual trade. You can get it ready. You can get it all set to go. And quite honestly, once you've been doing it as long as you have, and even as long as I've been doing it, you tend to know which side of that ask bid it's probably going to open at too. You know what I mean? Is that dollar was pretty simple to see on that Venom, probably wasn't going to be it. It was going to be closer to that 225 that you hit. That was where it opened up right about. So, again, there's a lot of things that you can take away over the weekend. What you don't want to do is actually, in my opinion, and in Dr. Ellman's opinion, is to place the trade because you're dealing with too low of a liquidity and too big of a spread.
Absolutely right.
Well, thank you so much for joining us. Like always, Dr. Ellman, you give us so much information, so many tools to use. So we really appreciate it. Thank you. And we're going to let you give us.
Look forward to our next discussion.
Absolutely. We're going to let us go at that note. Hey, our Red Sox and Yankees look like they want to battle it out this year. So I think we're going to have some fun talking baseball during the year also.
I'm gonna end up on top on that one, Howard. For sure.
I'm not buying that yet, man. We're looking good too. We just swept Steve's Cardinals, so I'm already on the wrong side there with my boss. You have a great week, and we will see you again next Monday, Dr. Ellman.
Take care.